Welcome to the Lunch Hour with Mr. Credit.
Oh, well, he's very popular.
And today it's Macro Monday.
Sounds like somebody's got a case of the Mondays.
Where we show you the big picture and how you can take advantage of it.
Show me the money!
And now, the Lunch Hour with Mr. Credit on ESPN Radio 1700.
Welcome. Yep, it's that time. It's your lunch hour. Mr. Credit, 1700, ESPN. It's JJ in the hot seat. Yep, I'm back. I was back on the East Coast working from back there. Second office in Cape Cod, which I do every year. And it is good to be back in San Diego, although I do enjoy the East Coast. There is nothing like flying home to San Diego. It's a great place to be. And happy to be back in the hot seat right here for your lunch hour. And thank you for taking your time to make yourself, hopefully, a little bit smarter than everybody else. Today we have a great panel in the studio, and that's what we do here on Mr. Credit. We bring you the experts to bring you the information that you need to know to make you that little bit smarter than everybody else. We have, for first time, Leon Deans from Leon Deans and Associates, leondeans.com. And I'm going to spell that a little bit later for you just so you get it right when you are looking him up. How you doing, Leon? Thank you for taking the time.
I'm doing great. I really appreciate you having me on. I'm a huge fan of the show. So
I like
it's definitely a pleasure to be here.
Well, and then being a huge fan, you can help make other people smarter today, which is great. And I know you're a busy guy. We always appreciate people taking time out of their day. It's really tough, especially on a Monday. Coming off the weekend, you're in the real estate business. Mondays are usually the busiest day for people coming off the weekend. So thank you for taking this hour out of your, and it's not just an hour, it's more than that. So I appreciate it. Marcia Linick.
That's right.
I got it right. Well, hopefully I got it right, or you're just flattering me by thinking that I got it right. From Award Mortgage Group, and thank you for taking time out of your day on this Monday for being here.
Thank you so much for having me here.
And you're a first-timer on the Mr. Credit Show as well. No, not on the Mr. Credit Show.
No.
So I was wrong.
It was hosted by somebody else. I think you were gone or something.
That's very possible. That is very possible. Well, we have a great show for you today. And, Marcia, I know you're not a basketball fan. Leon, I'm not sure if you are. This is just one of those things that it's befuddling to me. And I had to bring up. We're on ESPN. We're a sports channel. So, LeBron James. And I don't know if you follow the story at all. It's one of those things that I don't know if I feel good about it. And that's my thing. Here's a guy that was, he's the king, right, in basketball. The young prodigy at 16, he is going to be one of the, at an early age, he's going to be one of the best in the basketball generation to come. At a young age, goes and joins the league, and he's proven himself. Got a couple titles, and he leaves Cleveland. I don't know. Do you remember when he left Cleveland?
I do. It was a big deal. It's a very big deal. Puts on a special appearance show basically to announce that, and Cleveland fans at the time were burning his jersey. Here's a Cleveland kid, playing for his hometown, and all of a sudden he's ditching his hometown to go win some titles in Miami. And now all of a sudden he's coming back. And, Cleveland fans they're okay with it. And now the Miami fans are upset, painting over his face on the outside of the arena and things like this. So it's interesting to me, and not all sports are like this, and I get it. Sometimes it's about the money, right? You got to chase the money. He doesn't need the money per se. The guy's on his way to be a billionaire. So it's not about the money. For him, it's about coming back to his roots. But, Leon, as a fan, and, we don't have the privilege here in San Diego to really get these superstars coming and going. We just don't. We've had a few. LT, LaDainian in the football world. But his time was kind of up when he left. LeBron, is it okay to just bounce around these NBA teams? And, should the fans just welcome him back that easily? What do you think? It is absolutely okay. And, yes, they should absolutely welcome him back. I remember when Michael Jordan was at his peak,
And I had friends who would, repeatedly root against him. It doesn't matter if he was playing Utah, if he was playing the Suns, if he was playing Seattle. They would just root against him. And I've never been, a Chicago Bulls fan, but watching greatness is something that has to be appreciated. LeBron James is going to end up being one of the top 5 players to ever play the game. He is absolutely incredible, and that's part of sports. You love him when he's on your team. You root against him when he's not, and he's coming back. Absolutely, they're going to embrace him. And absolutely, Miami is going to burn his jersey, and that's the way it should be. That's absolutely the way it should be. I think we're lucky to watch him. I will hate him when he goes and plays against my team, but if he were coming to, and my team's the Golden State Warriors, so few years here we've been pretty decent, but for the most part, my childhood and adult life, they've been the Western Conference doormats. Yeah. But if he were coming to Golden State, absolutely, we would be. I'd be wearing a LeBron James jersey.
Yeah, I like that, and thank you, because you know what, you actually made me feel better about it, because I was thinking, I didn't think it was that okay to just say welcome back, but you're right. He's a top player. You should want him to play for your team, and for him to make that decision to come back, I think it's a great thing. And he is definitely going to be recognized as one of the top of the tops when he leaves the game. It'll be a sad day when he does leave it. He's a phenomenal player, and it's not about the money. I mean, I think that's the cool thing, is he could have whatever he wants, wherever he wants to go.
When people say it's not about the money, oftentimes it's about the money. You know what Rockefeller said when they asked him, how much money is enough? He said, just a little bit more. So I think no matter where you are.
You always think it's about the money?
Well,
with these guys?
I don't know. I do. I always think it's a concern.
Yeah.
You do have a legacy. You do have a family to provide for. I think those folks, and maybe someone like myself, I'm thinking about putting my 2 little ones through college. He's probably thinking about putting great grandkids, through college. He's building something.
Yep.
But there's no way that you can say that it doesn't come across his desk and it's not a consideration. It's always going to be a consideration. And I don't think there's anything wrong with that.
I guess if it wasn't about the money, he could just sign a contract for $5 million and leave a lot of money open for them to obtain other players to get that title. But it's amazing what these NBA players are making these days. I mean, $20+ million, big contracts. And we'll see if he can bring a title to his hometown Cleveland there. It'd be interesting to see. So this article, this was on CNN. And I know you guys saw it just because I sent it to you. But so China's GDP growth is slowing. And, we don't often look around the country because we're always so focused on the United States here. And I'm not going to go through the whole article. It's just interesting to me. There was a piece of it that I wanted to pull out. And I'm going to get to the quote here. But I'll kind of go through the basics of it. It's not like their GDP is drastically shrinking or anything. We're talking about 0.1, 0.2% over the next couple of years here, and it keeps dropping. But a majority of the economists, 80% of those surveys, said that China's property market is the biggest risk to their economy. Over the past 3 quarters, most economists had identified credit growth as the greatest hazard. So they're looking at property risk. Now, what does that mean? It means that they have a lot of properties that are unsold. I mean, they have a lot of vacancies going around because they just kind of went gangbusters with their buildings. So the major concern is oversupply. Property construction has been growing at an unsustainable rate, with the pace of urbanization having peaked. And this is Qin Wang of Capital Economists. That's their quote. With developers' inventories of unsold property still increasing, real estate looks set to remain a drag on the economy. So looking at this, it kind of makes me think backwards. How did we get into our mess in the United States here? And that was not so much unsold property. It was actually too many people buying property at high prices, not qualifying for mortgages, and the market, too much appreciation in that marketplace, and it kind of blew up on us. So to combat this, the economists in China expect the central government to continue to prod local jurisdictions to relax restrictions on multiple home purchases. Those rules were previously put in place in an attempt to arrest rising property prices. So instead of allowing people to purchase homes, pushing the property evaluations up, they've kind of restricted them so as not to sell so many properties. Now, that's fine, and I'm not too concerned about China because they're buying our properties, right? Coming here buying our properties with a lot of people with cash. It just opened my mind to a question that I had for you guys just being in the marketplace, and we have Leon Deans and Marcia Lennick in the studio today. And my question to you guys is this, and Leon, I'll let you start with this, but we kind of had our housing bust, and then we had our growth phase in the last few years, and now we're kind of back. I mean, now the housing is robust. It has been robust the past few years. We've seen incredible property increases in evaluations and appreciation. And a lot of that has to attribute to allowing investors to just gobble up whatever they want. And I'm not just talking about local investors. I'm talking about books of business to gobble up inventory and fix it and release it back out to the marketplace. I'm just wondering, as we've all dealt with the common person trying to get into the housing market and getting outbid for years now. I mean, it's crazy to think that, but 2011, 2012, 2013, now we're here at 2014. We've had this sort of dealings. Do you think that we should have put restrictions in place to slow the investor down from buying too many properties, Leon?
Oh, absolutely not. Anecdotally, I think any real estate professional out there is going to have a story about a buyer they represented who got outbid by an investor and was incredibly frustrated. And when it's your client, and I've been in that same position, it's certainly frustrating. But if you look at what the investor class has done over the last 3 years, they're largely responsible for bringing us back, which in turn does help the layperson. And I'll give you an example of what I mean by that. We had a ton of foreclosed homes, just an absolute ton of them. And in addition to individual investors going to the auctions and buying homes to flip them, you also had huge hedge funds out there buying big blocks of homes, which is I think what you were alluding to. So that gobbled up a ton of this inventory that wasn't being purchased and couldn't be purchased by regular folks. And in turn, it pushed prices up, which helps the average person. Let's say you're in a home that you bought the house in maybe in 2008, 2007, and you were underwater for the longest period of time. Well, now, because these investors are buying up all these homes, right?
Yep.
Then it raises the prices up. Now you're in a position where you're not underwater anymore, and you can refinance. So the overall health of the market has really benefited from these investors. Now, I don't really have any investor clients. I'm not out there flipping houses. I represent regular folks. That's my bread and butter. So anecdotally, I mean, I've been in that.
Us all.
Yeah, I've been in that spot, and I've been frustrated by it. But when you take a step back, it's been good for our market overall.
I agree. Marcia, what do you think?
Well, I agree with him, and but I think that definitely the cash buyers have actually scaled back, and my understanding is that it's going to be less than 10% of the purchases this year will be represented by cash buyers. But yeah, there's a whole cottage market that's sprung up. There's one company that, they do like 15 to 20 flips a month.
They're out there.
Yeah, and I've dealt with them, and it definitely put the kibosh on a lot of offers that we were hoping to get accepted last year. But I'm seeing a lot less of it now, and so that's really kind of playing off of what my experience has been, is that we're not seeing as much infighting from the cash buyers. It's more from the multiple offers, which, it seems like it's becoming a little bit more of a normal market now. And there's not severe beating up on both sides of the transaction.
Well, I think the U.S. has done the right thing by not getting involved. We don't want our governments telling us how many properties we should buy or we should own. So China, you can keep that one, and we don't have that massive overflux of inventory right now. When we come back, we're going to talk more about real estate. We have Leon Deans and Marcia Lennick in the studio to make you smarter than everyone else. We'll be right back. It's your lunch hour.
Welcome back to the Lunch Hour with Mr. Credit. And today it's Macro Monday on ESPN Radio 1700.
Welcome back. It's your lunch hour with Mr. Credit's JJ, Synergy One Lending in the hot seat today. Great panel in the studio. Leon Deans, Marcia Linick, and I'm going to give you the spelling of this if you want to go to leondeans.com. It is Leon, Leondienes, because you might get that misspelled trying to find this fine gentleman that's in the studio to make you smarter than everyone else. And Leon, I want to talk about this. You know, we just kind of got, into the real estate section of the show today, and it's an interesting dynamic. Here we are. We're already midway through July. I mean, we're halfway through summer. It's an amazing thing. Inventory levels are up. They've more than doubled just in a few months. And I do want to talk about that. But a lot of times, I get the question, and I actually have a friend of mine that is looking to purchase a for sale by owner home right now. So it's good timing to talk about this. And she was going to try to negotiate the deal herself. Okay, she is represented on the sale of her home and trying to figure this all out. But when we're talking about real estate and the real estate market, I want to get your opinion here. Can you explain to the audience here, what do you get a real estate agent for? I mean, why are you hiring a realtor?
That's a great question. And it's funny because I think you posed that question to quite a lot of different people, and we don't ever seem to get, the simple answer, which is we help you sell your house. We help you get a house. And I know that sounds maybe oversimplified, but if you ask the same question of a tax attorney, what do? They help you file your taxes. Could you do it yourself? Absolutely. And millions of Americans do it themselves. But you hire a tax professional because it's a little bit more complicated. There's a lot of moving parts. And a lot of times things go sideways. If it were really, really easy, and there are plenty of real estate transactions that are super smooth. And, maybe if you're fortunate, you can do it for sale by owner and you don't need us. But most of the time, these things get a little tricky. And, the other bottom line is we help you sell your house. Usually, the allure of doing it by yourself is usually to save that commission money. Commission money is always front and center. Usually, folks will sell their houses for quite a bit more and pay the real estate commissions than if they do it by themselves.
Can you tell me why that might be?
Well, when you sell your home by yourself, the reach of your marketing is usually fairly small. You may have
the people that are driving by your sign.
You may have a little sign sitting in front of your house. Maybe you put it on Craigslist. But the MLS is probably the most dynamic, far-reaching marketing tool to sell a home that there is. It's not a trick. It's not a secret. But it is really what opens up your home to everybody who's looking. Yep. So, if you have that wonderful property in an incredible neighborhood, in an incredibly hot market, sure, maybe you put a sign up and maybe you get it, maybe somebody makes you an offer. Usually the folks that come in unrepresented themselves are incredibly savvy. They have bought a ton of property. And I can tell you, if you're in court and someone's got an attorney, I'd lawyer up too.
Oh, yeah.
And that's my main thing. If someone's coming to you and saying, hey, I'll buy your house, we don't need any agents. That's because they're very experienced. Maybe they don't need an agent. But usually that ending sales price is going to be less than if you put it on the MLS, listed it with an agent, and had the full breadth of the buying community, looking at your property.
Pay the full commission.
Absolutely.
And just do it. Yeah, it's interesting. So I was talking, going back to my friend Claire. Here she is selling. She just purchased her home a couple years ago, and you're talking about the appreciation and thanking the investors. I mean, this was a property that they didn't plan on flipping at all. They planned on buying it, living in it. It's a condo, and they've done quite well. They'll clear over $100,000 profit in just a couple years on this place by doing a little bit of work, and it's the going price. And my whole thing to her, she's now buying a property where they're the for sale by owner seller is kind of like, yeah, put your offer in. Tell me what, this is what I'm asking. But he's not done with the work that he's planned on doing on the property. Mm-hmm. And my point to her was, okay, you're using an agent to sell your home, but you don't want to use an agent to buy a home? I mean, think of the legal protection that you're going to have. I mean, that's the other end of it that we have to think about, is you're offering a fiduciary responsibility to your client as a realtor by representing both a seller and a buyer. And I think statistically, over the long haul, as a seller, if you do hire a realtor to represent you, you will net a greater amount on the sale of your home by paying full commissions on both sides than by selling it by your own. Now, that's a range, but statistically speaking, you're going to win out by hiring a professional. Marcia, are you seeing the transactions with the for sale by owner out there right now?
There's some people, it still is a good market for sellers, but I would never do it. The one thing you didn't mention is the emotions that are involved. And when you're dealing one-on-one with the person who's selling it, they've got their emotions tied up in it. And you've got your emotions on, what you want to have. And there is no buffer in between. So not even talking about the liability of it. Those emotions, it's right up there with losing a family member and losing a job. That's where the anxiety level is on both sides. Yeah. So, no, I'm not seeing a lot of for sale by owners.
Well, that's a good thing. I think that's a good thing.
Yeah, and typically I'm just the same thing as you anecdotally. I've been in this business for 30 years, and I've you've seen it come and go. But yeah, most of them are not successful, or if they are, then
they can happen.
Yeah.
The
thing happen. Too is that when you're working with an agent, they're going to be more diligent on inspecting, and making sure that you get what you want from that seller, or you get what you need if you're the seller or if you're the buyer. So
and again, you're representing either side, and we're going to talk about something down a little bit later, and that's representing both sides at the same time, but we're going to hold off on that. So, Leon, we want to hire a realtor. So, what are the steps that we need to take to hire a realtor? I mean, I hear people, hey, I'm going to talk to a few different agents before I pick one. I mean, what do you suggest? I mean, do you think that's a good idea to sort of interview a few different people, or do you think, I got a buddy, an aunt, an uncle that's a realtor, I should just kind of take them on?
No, absolutely. I think it is a phenomenal idea to interview at least 2, if not 3, realtors and brokers. And I think you should be prepared with a set of questions to ask them, too. I mean, I think it's pretty rare that I get asked the questions that I think, everybody should ask. And I love the premise of this show, making you smarter than everyone else. So, I would definitely love to share a few things that I would ask.
Please.
If I were interviewing somebody.
Definitely. And what are those questions? Because I think that's the hard part. I mean, if I'm buying a home for the first time, or maybe I'm selling my first home, I don't really know the questions to ask because I don't really know what's important. I mean, what are the most important questions to ask?
Well, starting first of all, I think experience is one of the most important things. And I'll tell you, before I answer some of these specific questions, one of the things that I absolutely hate across all industries is salesman talk. Answers that don't really answer the question. And that's how I judge somebody when I'm interviewing in any walk of life, whether it's I'm interviewing, to buy a computer, or to buy, for a tax person or a contractor or anything. So is getting a real answer. So, the first thing I always ask for is experience. I mean, you are talking about, especially in San Diego, I don't have the statistic in front of me, but I would assume that the average sales price here is probably $400,000 or $500,000. Yep. So let's just call it $500,000. If I were going to trust somebody to represent me in a $500,000 transaction, I'd like to know that they've done it before.
No, come on. And maybe, why is that important?
And maybe more than just 1 or 2 times. So one thing I would definitely ask is, how long have you been in the business? And then check for the salesman answer. I love it when you ask somebody, how long have you been doing this? And they say something to the effect of, well, my family's been in the business 30 years. Well, that's great. But you didn't answer the question at all. So when folks ask me, how long have you been in this business? I tell them, I got my sales license in 2005. I got my broker's license in 2008. So I guess if you do the math, I'm doing this right around 9-10 years. It's a straight answer. That doesn't mean that you don't want to trust someone who's been doing this 3 years.
Yeah, I mean, you got to start somewhere.
Got to start somewhere.
But
most folks start with friends and family.
Yes.
I did. My first deal was my godmother, helped her, buy a house. My second was, a good friend. So, I mean, that is the way it works. And sometimes folks will trust someone close to them. The other thing I ask is how many transactions? There's folks that have been in this business for 20 years and have done 10 deals because they've had their license and they've been smart enough to renew it. So I like to ask specifically, how many transactions have you done this year?
Yeah.
How many transactions have you done last year and your career? It's really important information. And if somebody ever asks me in a listing appointment, or if they're interviewing me to be their buyer's agent, I always say I'm happy to print them out.
Let me ask you this question. I mean, going off of the transactions, so, I mean, if I'm sitting there and somebody says, I've done, I average 10 transactions a month. I sell 10 homes a month. Should somebody feel uncomfortable that they may not have the time to take for their specific transaction, or do you think that's a moot point? I mean, if you're doing a lot of business, you got it figured out.
Well, firstly, I never like it when people say averages. I like to hear the actual number.
Give me a number.
Many, if you want to know how many transactions I've done last year, I'll tell you. All that sort of more direct answers. In general, I think there's a sweet spot. I love that person in any industry that's been doing it long enough to have a lot of good experience, but not so long that they're salty over it. And some folks...
Where does that put me, Leon?
No, well, some folks have tremendous... You obviously have tremendous energy and enthusiasm. And some folks do. You can do this 50 years and have the same enthusiasm, so certainly don't want to paint you in that light. There are some folks, though, that have been in this business, let's say 40 years and just, are salty.
Yeah. Well, and that's a good point. And when we come back from the break, I want to talk about marketing your home, because bringing the old dogs that have been in the business for a long time up to speed on what works today, I think is very important in this industry. When we come back, we're going to get right into that. When you hire an agent, what do you need to expect from that agent to market your home? It's your lunch hour, 1700 ESPN.
Welcome back to the Lunch Hour with Mr. Credit. And today it's Macro Monday on ESPN Radio 1700.
Welcome back, and thank you for taking time out of your lunch hour to listen in and make yourself a little bit smarter. We have Leon Deans in the house today, Marcia Lennick, and we're going to just jump right back into this. Before the break, we were talking about, what are the questions you ask to hire an agent. And experience, seems to speak volumes. So make sure you do that. Let's say you're in the midst of, getting ready to sell your home. Leon, I want to get into this because we were talking about, experience is good, but, if somebody's been in the market too long, make sure that, they're up to speed with, and I'm just going to call it out. Let's say technology, right? Technology has changed from 20 years ago in the marketplace, how you may do things, how to get your home out on the market. We're not talking about, getting pink sheets and the special list, right? Everything is out there on the intranet. So you need to make sure that somebody's, up to speed on that. But what does it mean to, if somebody's telling you, I can market your home better than somebody else. What does marketing your home even mean?
Well, this is an area where I think I'm going to let you behind the curtain a little bit.
That's what we want.
It's one of those things that always irritates me when I hear folks say, I'm going to market your home, because it's an answer, but it's not really answering it. The truth of the matter is that 90% of the marketing of any home is done through the MLS. And there's nothing insidious or wrong with that. I like it when people are just candid with me. And that's what I think most folks would prefer, if you just tell them the truth. So instead of making it seem like you're taking 8 different avenues to market a home, when in reality you're inputting it onto the MLS, but the MLS is fantastic. It is probably the most dynamic, far-reaching marketing tool to sell a home that exists. You input a property onto the MLS, and it is instantly or almost instantly disseminated through what's called IDX technology to every other website. So, and here's the thing, the great thing about this profession if you're a real estate agent, is that we control the MLS. So you can't just put your property on there without us. Yes, you do need us for that. There are a few other avenues, and there's a few ways that you can do it better than other. One agent may do it better than another. My favorite thing is having professional pictures, taking the time to meet with clients at their home, help them get their home ready to go. I mean, I tend to be incredibly anal about how a room looks prior to, down to, and I think a lot of people in the industry make fun of me. I always have my bowl of fruit. I have this wooden bowl with apples in it. And it's in almost every single kitchen shot if you go back to all my listings for years. I think spending the extra money, having professional pictures for every listing, and I think anybody who's looking for a home has looked at homes listed either on the MLS from their agent or Trulia, Redfin, Zillow, any of these consumer sites, and you can tell the difference when an agent took the picture with what looks like their own little disposable camera, or if they had a professional come in.
We have seen that, definitely.
You can go the extra mile, and you can also present it to folks the way it really is, which is
I think honesty. Yeah, honesty. And Marcia, I wanted to talk about this, and we're gonna tie this all in, but I'm one that goes around to the real estate sort of pitch sessions where the agents get together and kind of pitch their new properties, and I'm seeing a lot of back on market sort of properties coming back on the market, and a lot of times it's kind of one of those things. It's the buyer didn't perform, and I want you to talk a little bit about. I mean, first of all, that should never happen. The buyer should never be able to not perform if they were properly pre-approved. So give me the steps. I mean, you're a buyer, you're out there. I mean, give me some steps that you need to take right up front to make sure this doesn't happen. Because if you're on the other side and Leon's on the other side selling this home, he's not going to be very happy on day 17 when that contingency comes up and your buyer can't perform. And this should, when I hear this, maybe it's another issue, but it should never happen, right?
That's true. And so basically the first thing that they do is they should talk to their mortgage professional. And the first thing I do is give them a very comprehensive list of what they need to put together. And it's pretty much the same every single time. 2 years tax returns, W-2s, paycheck stubs, bank statements, driver's licenses. It's a real routine list. And what they can do to make sure that their loan is solid is to give the loan officer what they request. And give it to them up front. Because, if you've got somebody who's, especially when they're self-employed, there's so many things that can be added back in or that they're not taking into account, people that are in commission, if they've got expenses that they're not telling you about. It's real important to get those tax returns up front. So really to keep you from falling out, all those things up front, day one.
Now, there's been so much regulatory change in the industry on obtaining a loan. Some people think that it's too much regulation. I have my own personal opinion on this, but how have Dodd-Frank and the changes from the CFPB, regulatory changes affected people obtaining financing?
Mm-hmm. In the long run, if we look at it down the road, it has been an advantage for borrowers just because of the way that the compensation is paid. It's more of a level playing field than it used to be, but there's definitely unintended consequences from the Dodd-Frank. The last thing that was implemented was January of this year, and ATR, ability to repay. And so what that does is it puts a cap on the debt ratio of, what a person can qualify for. So, but, honestly, I've been in this business long enough that I can tell you that it's not really that much more restrictive than where it was. That's my opinion, than where it was before all this happened in 2005, 2006, when everything started tumbling. The ability to read a tax return in 2008, when everybody was so used to doing no income qualifiers, everybody went down on their knees and said, how do I do this? That was a big major step. But, there's definitely unintended consequences. The lower loan amounts are being affected by the APRs. It is a little bit more restrictive compared to where it was before, but prior to 2005. We're just about in the same market that we were then.
Yeah, definitely. And I think, as Leon alluded to, that's why it's so important to work with professionals that know what they're doing, that have that experience. Because it is amazing. I mean, a lot of people, and you probably know people in the industry that got out of the business. I mean, in 2008, when the regulatory changes we went back to the full documented, sort of loan program. So it's really important to find out how long has somebody been in the business. Because, if they got into it in 2005 or 2006 from a lending perspective, they learned the business in a stated income loan perspective. They weren't in that business in the the late 90s, early 2000s. From a lending perspective, it's really important to be able to understand taxes and have the knowledge on how to read them. Very important. Experience is huge. When we come back, we're going to continue. Time is flying by today, but we're going to continue on down this track, making you smarter than everybody else. We have Marcia Lennick with Award Mortgage Group and Leon Deans and Associates in the house today. Your lunch hour. We'll be right back.
Welcome back to the Lunch Hour with Mr. Credit. And today it's Macro Monday on ESPN Radio 1700.
Welcome back. It's your lunch hour, and thank you for taking the time. Leon Deans and Associates in the house today. Marcia Lennick with Award Mortgage Group, bringing you the information you need to make you smarter. It's JJ Synergy One Lending. Running the hot seat. Been gone for a couple weeks. Great to be back. I'm going to do a quick question from the Mr. Credit inbox that I have to get to before we run out of time. And this is an important one. We're going to fly through this. Mr. C, I'm working with a terrible bank that is refinancing my FHA loan to get out from the mortgage insurance. I went with the people that I make my payment to since I thought it would be easier to get it done. It has not been and has been a real struggle. They are now telling me that my loan documents are ready to sign. I've reviewed the closing statement from escrow. Seems like the payoff of my old loan is very high, and I do not understand why. We are scheduled to fund this week, but it looks like the current bank wants to collect double interest through the entire month. Should I cancel this and start fresh? I feel like I'm getting ripped off. Thanks for any advice, Tony A. So, Tony, you mentioned FHA, and this is one of the things that is very important. If you have an FHA loan, you're refinancing that FHA loan, please note that FHA will collect the interest for the month that you are paying the loan off from day 1 through the end of the month. It doesn't matter if you're paying it off on day 3 or day 30 of that month. It's very important. So, Tony, you're not getting ripped off here. They're just following the guidelines. Now, they should have timed this a little bit better, because if you are going to refinance an FHA loan, you always want to fund the loan as close to the end of the month as possible to mitigate as little double interest as possible. So I wanted to get to that question because it's very important. A lot of people are refinancing FHA loans to get out of the mortgage insurance. Let's wrap it back to what we were talking about, and that is buyers, getting qualified, how not to fall out of escrow. And Leon, I want to reach back to you. You have some ideas to help mitigate people from falling out of escrow. Real fast, what are a few different things that you do to help mitigate that escrow from falling out from a buyer not maybe performing?
Well, to start, when you receive offers on one of your listings, the first thing I do is put the letter of pre-approval on top of the offer, and that's my first phone call. If you start with the buyer's lender and you start asking them some really good, in-depth questions. Has your borrower filled out a 1003? That's the mortgage application. Do you have a copy of their tax returns? Do you have a copy of their pay stubs? I also like to ask whether they're W-2 wage earners or independent contractors. W-2 wage earners, it's a couple of paychecks. Those files tend to be a little bit easier, have less moving parts. So before I even suggest to one of my clients that we accept an offer, I've already had a conversation with the lender, and I try to get a pretty good read on how that buyer's financing is.
And I think that you make a good point. I think, Marcia, maybe you can chime in here. I mean, obtaining the tax returns and obtaining the W-2s and the paychecks, because, just filling out the 1003 doesn't really complete that pre-approval, right?
Right. Yeah, I've had transactions that I've gone and rescued that the buyer's agent has a pre-approval from somebody else, and this is a recent transaction where it was They had the application for 60 days and still didn't even have the tax returns. So that one, it's crazy. You have to have that in order to go forward with the loan.
And I think it's important, when somebody's asking for taxes and W-2s, for those of you who are listening, it's for a reason. You got to supply them because there might be some things in your taxes that you may not even know that are there that do affect your pre-approval and your income from qualifying. It's amazing to me, even myself, you can ask certain questions. Do you own a little side company or anything like that? The answer is no, and then you get their taxes, and sure enough, there's something that they're taking a loss on, or they have an unreimbursed business expense that you have to remove some income from. So we were talking at the break, Marcia, and this is intriguing to me, but we were talking about just, how financing has sort of changed, and you mentioned that stated income loans are slowly coming back.
They are coming back, and what I was saying is that they had a very bad rap because everybody was using them, people that weren't self-employed. And, we all know about all the debacle that happened as a result of that. But stated income loans were around before 2000, and there's a place for them again now. But it has to be, not crazy like it was in the past, and that's what they're bringing back. Income from self-employed people. Those are the ones that need the stated income loans.
And are you seeing larger down payment requirements from this type of loan program?
Yeah. You're always going to have at least a 20 to 30% down payment. Yep. But the rates are competitive, and it keeps you from having to go through all the hoops. There's a lot of different things that are pending now. There's a swing back as far as qualifying goes, and I do expect that to continue to get better. One of the most recent changes on Fannie Mae, just a couple of weeks ago, you used to have to document every last penny that went into a bank account. Now you can have up to 50% of whatever your monthly income is as a deposit. You don't have to go chasing it. So there are things that
let's hope the banks follow that, right?
If you have overlays, they don't follow it. We don't have overlays. We're Fannie Mae and Freddie Mac Direct, so that makes a difference.
It does make a difference. That's Marcia Lennick with Award Mortgage Group. And, one thing, Leon, I wanted to get back to is we talked about marketing properties. We talked about, hiring real estate agents. One thing that I see a lot of, and there's talk of it, being represented by both sides. Dual agency, we call it. So, it's one person representing the seller and the buyer. What's your feeling on dual agency?
I think it should be illegal.
Illegal.
Absolutely. Yeah. I have done it, let's say, twice, I think, maybe 3 times in my whole professional career, and that's over, 350, 375 properties that I've sold. I think it's inherently dishonest. You are negotiating with yourself. You know what both sides want. I think in general, the agent makes more money, and one side or the other doesn't get, great representation. There are a couple times every once in a while when it works, where it can work out. And like I said, I have done it, not in years, but I have done it a couple times. There were interesting situations where it sort of worked for everybody. But I think it's very rare, and I think the industry as a whole would be better served if it just didn't exist.
So what is one to do? Because, I had a friend, this was about a year and a half ago, found a property. He was having a really difficult time finding that property. And he finally said, you know what, I'm just going to the listing agent. He's having an open house. I'm just going to the listing agent. Sure enough, he got the offer accepted. Mm-hmm. Sure enough, overpaid for the home. But how do you stop that? Here you're holding an open house. You're the listing agent. Somebody walks in and says, I want to buy this house. I want to work with you, hint, hint, to have a better chance at getting this house. What are you to do? What's your responsibility factor there?
Well, I'll tell you what I did in February. I had a gentleman walk into one of my listings. I was holding an open house. He said, looked around, liked the house. He said, I'd like to write the offer. And I said, I'm really sorry, but I don't represent buyers on my own listings. Do you have an agent? And he said, oh, well, I've been kind of working with this one gal. And I said, well, absolutely. Why don't you have her write the offer for you? Because I send out, when I get offers on my properties, pretty darn tough counters. They mitigate people falling out of escrow. But the reason that I'm able to send these tough counters and still want people to want to work with me is people know that I'm an honest guy and a nice guy, and I don't steal other people's clients. So I called her up and I said, hey, your client walked in. I want to give you the heads up. He didn't seem incredibly loyal. You may want to know. It turns out it actually wasn't a very long-term relationship, and that particular buyer ended up getting something else. But, I mean, I think you are much better served by being honest.
Yeah.
And just saying, and I just said no. I mean, did I make twice the money on that transaction? No. But I think I earned the respect of that person, the agent, and my seller.
Definitely. And that's and for you listeners out there, I mean, this is why we bring these guests on. We search them out, the best of the best in the real estate side. That's Leon Deans and Associates. And we have Marcia Lennick here with the Ward Mortgage Group. If you want to get in touch with them, it's very easy to do. Just email at mrcredit.org. We'll put you in touch with them. And you can see, I mean, when somebody's giving up a commission, giving up an income to do the right thing, I think it's something that is admirable. And I agree with you. I always find it very difficult to see somebody represent both sides and find it to be the win for either side, and maybe it's the win for the seller, if anything, but it's very difficult to have a fiduciary responsibility and represent both sides equally and fairly. Marcia, do you have any input on dual agency here?
I've seen it. And yeah, I do agree with you, because I just don't know how you can fairly represent. I mean, it is a ploy that buyers do, and a lot of the big investors do. They do employ, dual agency because that's what they want.
They want
because
the money.
They want to have they want the inside line. But as an agent, I think I would also have a real problem doing it, just exactly because of what you said. It's just you can't be fair to all sides.
It is difficult,
and especially if you start with the seller. I don't know. There's not too many people that can walk that line.
So make sure that you reach out to us, and we'll put you in touch with the right people here. That's Marcia Lennick with the Ward Mortgage Group, and we have Leon Deans. You guys, time goes by fast. When you only have an hour, it just speeds right on by. I appreciate both of you for taking the time to come in today.
Yeah, thanks so much.
It's been a great show. Look forward to having you both back on. And we will just continue. I mean, we didn't touch half of what we wanted to talk about today, but we will have them back on. Thank you for taking time out of your day on the Mr. Credit Show. It's your lunch hour, 1700 ESPN. We'll see you next time.